This morning, I made over $3,000 trading gold in just 30 minutes. And in this video, I will go through my step-by-step analysis through the higher time frames down to the lower time frames, what I was thinking, how I executed this trade, my risk management, and everything like that, so you can learn how to do it yourself. Now, for some proof that I took this trade, we will go to my Discord server where I post all my trades live as they happen, link in the description. And as you can see on my Discord server at 1:58 p.m, I posted that we were long on gold. And this is a screenshot I sent on the 1 minute time frame. And I posted updates half an hour later of it smashing our take profit. So you can check this out yourself, link in the description. I post all my trades live as they happen to prove I am a profitable trader. So going on to the charts, this is the trade that we took. A quick scalp, half an hour on gold. Now, why did I take this trade? Well, like always, my analysis starts on the higher time frame. And on the higher time frames, I like to work from the daily down to the 4 hour, to the 1 hour, to the 15 minute, to the 5 minute, finally to the 1 minute to enter. But let's start on the daily time frame. Now, we entered our trade, obviously today, it was this morning on this big blue candle. But what did I see on the daily? Well, gold on the daily has been consolidating. So when it's in a range, you want to buy around the bottom and you want to sell around the top. At the start of the day, we were somewhat in the middle, but we had a big bullish candle and then a kind of a bit of a bearish candle, and price was just kind of consolidating. So can we get a bias just from the daily here? No, we can't. But if you look over to the left of the daily, about here, we see we are in a big daily fair value gap. This whole blue range is our fair value gap, and as you can see, price never broke through our fair value gap. It respected it because nothing broke below it apart from wicks, which showed rejection. So the fact that we were rejecting so beautifully off this daily fair value gap showed me a good bullish confluence that I'd be looking for a buy. So that is what I saw on the daily. I saw we were consolidating, no trend, so you can't get a bias from the trend. But what we can see is that we are in a daily bullish fair value gap. We've come back and we've retested it, we've respected it with these wicks, and we haven't broken below it, so it shows bullish bias. So my bias for the daily is bullish. And I also like to plot my areas of liquidity, which are these black lines. And I like to put these at the low or the bottom of the wicks of any candle. But I've made a full liquidity guide. I will go more in depth into it on that video. And I will leave that in the top right hand corner for you to watch after this video to fully understand liquidity. But next we drop down to the 4 hour, and what I'm doing on the 4 hour is I'm kind of just getting another bit of a bias in, and I also start marking out lots of different areas of highs and lows and areas of liquidity. So I took this trade during this blue candle here. So let's just ignore this big bullish candle. That was from news today. It's irrelevant. I didn't hold my trade during news because I'm not a gambler, I'm a trader. But yeah, ignore this big bullish candle and we can look to the left. So to the left, we see very clearly we had a low under this wick because our areas of liquidity are under wicks. And also we had areas of liquidity here. And we also had lots of low resistance liquidity up here. So what could we kind of think about the day? What do we think the day is going to do? Well, we could sweep this low here and come up, which we did. We could also come up here, sweep all these highs and then come back down, or we could push even lower, take out this bottom low and then push up higher. So we have all these different areas of liquidity, which I have marked on my chart. And how I do that is I simply get my horizontal ray and I just click on the chart like so. And that is all the analysis I do on the 4 hour. Now we drop to the 1 hour and I do the same thing. Okay, is there any areas of liquidity on the 1 hour that we've missed in the 4 hour? Well, yes, we have areas of liquidity up here. But as you can see, we placed this trade on this 1 hour candle. So looking before, we see we had a low down here, this wick, and price came back down to the low, but it didn't break it. Here, we have something called equal lows, and under equal lows, there is a lot of resting liquidity. So my bias for the day was that we take these lows and come back up. So on the daily, I'm bullish, and on the 1 hour, I'm bullish, because when there's equal lows like this on a time frame as big as the 1 hour, it's very likely that we're going to sweep the liquidity and then bounce back up, and that was why I was confident in taking a long. So as you can see, we're using these higher time frames in harmony together to try and figure out a bias for the days, and then that's when we drop to our lower time frames. So 15-minute, we can see we were in a little bit of a downtrend, but nothing too major. And as you can see, once again, we have these equal lows down here. We have this wick, and all of these wicks under here. We have three different areas all showing us that there's a lot of liquidity under these zones. Why? Because people are going to be buying at this line, because this whole thing is a support zone. And when people trade support and resistance and they're going long at the support, their stop losses are going to be below the zone. So if we can come and break these lows, we can trigger all these stop losses and then grab liquidity and fill all the buy orders. So that is why there is a bunch of resting liquidity below these lows. So these are the things I'm spotting. I want to spot resting liquidity. I want to get a bias on the daily. I want to get a bias overall on the higher time frames. Then I want to drop down to the lower time frames and kind of see what price is doing. Also, we can see all of these wicks up here is called low resistance liquidity. It's areas that aren't major highs or lows, but still can hold areas of liquidity. So I was thinking, if we do come down and break this low here and form areas of liquidity, and we sweep liquidity, my targets could be areas of liquidity to above, of course. So we could take partials at these highs and then target London highs, which was this high up here, or Asia highs up here. I ended up targeting London highs because I thought Asia highs were going to take too long, because all of a sudden this news candle happened and I really didn't want to be trading during news. So I thought I'll get out as a quick scalp, 30 minutes just to London highs. Hopefully it finishes before news starts and I can get out and end my week on a high point. So 5-minute, again, nothing really different to the 15-minute. Low resistance liquidity up here. We have very clearly London highs up here, and we show that this area of liquidity is very, very big. We got 1, 2, 3, 4, 5 areas literally all here showing the support zone, just collecting and piling up loads of liquidity under this low, just begging for it to be swept. So last but not least, we have the 1-minute time frame, and this is where we get my entry. Now, here I'll go through my strategy very quickly and the confluences I use, but if you want to see in depth my lesson on teaching the exact gold strategy I use to trade profitably, I will also leave that in the top right hand corner for you to look at yourself. I go in really in depth in all my strategy for trading gold, but once again, I'll go through it quickly. Obviously, we swept this liquidity with this big bearish candle down here. And as soon as I saw that, I was like, okay, liquidity sweep, tick. Our bias is being filled for the daily. Now I can look for a bullish setup. The next thing I saw was price kind of go sideways for a bit. It was kind of confused. We didn't break this low, kind of like a higher low, higher high situation. We created this high with this wick, but as we created this high, we came back down. We didn't break a low. We kept in this bullish structure, like these higher lows, and then we created a higher high and we changed the character. We had a market structure shift, or a change of character, as I like to call it, because we were in a bearish trend before. As you can see, price is going down. And all of a sudden, after our liquidity sweep, we see a bullish change of character. We see a high being taken out and bullish structure being formed. So again, good confluence that we're going to be looking for buys, just like our bias in the daily and the 4 hour. And then once I see this change of character, I look for a retest into an order block or a fair value gap. And as you can see, these two blue boxes I've already laid out, we had a one order block here and another order block down there. And all we're looking for is a rejection off one of these levels. And I entered around this area here off this wick. I entered just as this was starting to wick up, because I had a really strong feeling we were going to form a hammer candle. And as you can see, we did. So I entered just as we were wicking, because the wicks show rejection, and that's also what I like to see. I like to wait for rejections. If you're less used to this strategy and what I used to do before I get more in tuned, I would just wait for this hammer candle to form and then I'd go for a long. But once you've been trading a strategy long enough and a pair for long enough, you kind of get a feel as to what it does, and you can kind of adapt your strategy a bit more to it. It's a bit risky, but it does pay off because you can put more lot sizes in and get better sniper entries. Now, when I entered, stop loss would be below these lows. Why? Because if price ever broke below this, we would be continuing this downtrend, and I obviously do not want to be in buys. price could sweep this liquidity and come back up, but it's too risky. We could just be forming more bearish structure. So that is why as soon as price gets below these lows, we don't want to be in this trade anymore, because this was not a liquidity grab. It was just a break of structure for the bearish trend. So stop loss below these lows. Always, if you're trading for sells, you always want to put them above the highs. Your stop loss would be above the previous high, like so. And then, like I said, we will be targeting London highs. Usually, when I have a setup like this, I like to target Asian highs, but like I said, I didn't want to be trading during news, and I thought that price would ultimately get to news. And as you can see, news did actually go in the trade's favor. But you never know with news. If news would have tanked and we're still in this trade, we would have lost out on all this profit and probably gone stopped out as well, and we would have missed out. Whereas if we targeted London highs, we would have secured a 1 to 3, and we did. And once again, this is just using my intuition in the markets, my experience from trading for 3 years and years and years of knowing that we shouldn't be waiting this long. We shouldn't be targeting Asia highs because there's news. Let's just take our quick profits, just targeting London highs, and then move on with our life. Now, why do I target London highs? Because my take profit is always at another area of liquidity, because we're consolidating between these two London areas. And when you do that between London highs and London lows, usually you sweep one, come back up to another, sweep that, and then come back down again. So you want to be scalping in between, buying when it takes the lows and selling when it takes the highs. And if we want to sell when we take the highs, we want to put our take profit there if we're going for a buy, because price probably is going to retrace back down into our stop loss. So I ended up securing profits at 1 to 3, literally taking me barely any time at all, about half an hour to 45 minutes or so. Easy scalp 1 2 3. So I hope you guys enjoyed this video. I hope you guys have learned a bit about my strategy, about my psychology, how I held this trade. And also, my Discord server is in the link in the description, top link. I post all my trades live as they happen from years and years and years. You can literally scroll back forever, and this is the proof that I am a profitable trader. I have funding certificates. Okay, it is completely free to join. We have an active community, and this is how I can earn trust from you guys to prove that I'm a profitable trader, because people see me and they see the fact that I'm young and they think, oh, there's no way this guy trades profitably. Well, here is your proof. I make money every single week, guaranteed, and you can see that for yourself in the Discord server. But other than that, watch my videos that I linked up top, my gold strategy and my full liquidity guide. And other than that, I'll see you guys in the next one. Peace.